Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm Tom Shellcross. With me, as always, is Mark Ainley. Mark, how are we doing over there?
Awesome. I got a great book for you. And I think I got a great book for our listeners. I know I've already given you this book and I'm pretty sure you read it already, but you guys have heard me talk so much about who, not how, and how that book changed my thinking. I know I pushed that down everyone's throat, but now my new book that I read is The Gap and the Gain, which is another book by Dan Sullivan. You read it, right, Tom? I know I've sent.
Oh yeah, it's an easy one for those who can't hunker down. It's an easy one. It's I don't know. It's short. It's good.
What did you like about that book?
So I would say two main things. One, I am like most of us, we're probably very hard on ourselves, right? And I think flipping like almost amplifies that. If things are bad, you're like, man, I need more deal flow. And then when you have deal flow, you're just stressed. There's capital, there's more workers, you're dealing with the city, you're dealing with buyers at the end, you're dealing with wholesalers. Like it's always just stressful and you always just feel under attack. And like you live in the gap. And personally, I'm just hard on myself, and that getting that message through, like, no, you should be thinking of this through this lens. It literally like took like a load off my shoulders. Yeah. Like you just feel better. And it's a very good mindset, and I'm not doing it justice. I'm kind of just rambling here, so I'll stop, but it's a really good book. It'll help you feel better about yourself. It'll help you see the progress you're making and just lead you forward to, okay, I can continue to make this progress.
Well, I think the biggest message that comes from that is when you're happy with where you're at or where you've gotten to, that's where your most creative part of you comes out and helps you actually get even further, faster. So,
it's not complacency. It's not being satisfied. It's just being happy with where you've gotten to, and you can continue to keep going.
Yes. It's the mindset that you need to be able to build faster. If anything, it'll help you grow faster.
Yeah, it was really good, really well written. And I did the Audible one just like you. So you get their little interview in between each chapter, which I also like.
Yep. It's all about audiobook.
So cool. What do we got for the housing provider tip of the week here?
All right. This is something that we have had issues with recently at the office, or it always seems to be a move-in issue problem where the tenant needs the key to the mailbox. Why use a mailbox that has a key? So, sometimes they look sexier, or you want your tenants' mail to be safe, but just don't do it. Most, short of associations where you don't have a choice, where you have like the community type mailboxes, but in your houses, especially when you get different, better parts of the city, but even in our Southside portfolio, we stopped using the mailboxes that have keys in them because they either get broke because someone else loses the key and bends the heck out of it, and it looks horrible hanging on there, or you're always changing out the little lock so the people do have the key. So either take your mailbox that has the key in it and pop it out and save yourself that future trouble on your next turnover, or when you're buying the mailbox, don't buy the one that has the key that goes with it.
All right, Mark, today we have a serial entrepreneur, and we want to thank our friends over at Renovo for making this introduction. We're very excited. We're going to be talking about how blockchain is disrupting the industry, which, Mark, I don't know about you, but I know nothing about. So I have like a billion questions to ask.
Exactly.
It's going to be good. So today's guest, co-founder and CEO of Flawless Homes. They've been absolutely crushing it for the past 6 years on both the development and the brokerage side. Also was the founder of Building Block REIT. Focuses on end-to-end solution for REITs and funds, making them liquid through a secondary market, smart security issuances, and integration technologies. So without further ado, Simon and Enwia, welcome to the show. Simon, how are we doing today?
I'm good. Thanks, Mark. How you doing, Tom?
I'm good. We are excited here. Man, we appreciate the intro from Renovo. We have a lot to get through. Before we get there, though, let's just talk about chronologically here. At first, you were an investor. So how did you start investing in Chicagoland? Like, what was the ground point? What kind of assets were you looking at? Just give us a little bit of that background and we'll jump from there.
Yeah. So 2011, I moved from Arizona to Chicago, and basically got a loan, a small family loan to buy a condo for $50,000 in Rogers Park. It's nuts. And basically needed I couldn't find a job. The job market was horrible back then. I'm not sure if you remember, fresh out of college. I was in grad school, and so I couldn't get a job. So I had to make my own. And part of that was investing in real estate. So picked this place up, fixed it up, didn't have an association essentially. So a year and a half later, flipped it for more than double what I picked it up for. And then did a bunch of flips the same way, using as much leverage as possible. And basically did it the same way over and over and over again. Got pretty good at it. And then in 2016, co-founded Flawless Homes. So, yeah, I mean, it was more out of necessity than anything as far as investing in real estate and just doing the work in Chicago.
What was probably like, let's call it the first big project, right? You kill it on that flip, but at the end of the day, you can only make so much on something worth $100K, right? So you see, we're doing good. Let's do another one. Let's do another one. At some point though, what was the, ooh, this is big, I'm scared? What was that project?
It's never really stopped. So, I mean, I kind of work on those, this is big, I'm scared every year, because I try to expand the horizon every single year. I try to push it every single year. And so, for me, initially 100 grand would have been scary, right? Mm-hmm. 10 plus years ago. And then, $500,000 was scary. And then $1 million is scary. And then, redevelopment is scary. Rezoning is scary. A $5 million project is scary, but it hasn't really stopped. And so I don't think it's going to stop. I think, when people in real estate a lot of times say, well, I wish I had a 20 unit building and I would retire. But that's not where it ends. Not with me anyway. I think with real estate, I always think that 1/3 of your assets, outside of the home you live in, should be minimum in real estate. And I think that for me, being in this business, it's more about pushing it and pushing it and pushing it, and kind of setting the bar pretty high and moving it up every year and trying to really get the bigger size project. And that's, as a wholly owned investor. Now, if I was doing like a larger project, I mean, sky's the limit, really.
I want to kind of reframe what you just said. I think if you're trying to grow as an individual, push beyond what you were capable of the year before, I think there is always going to be that uncomfort and that fear. And I think if you don't have that, either you're not taking enough risk, or you're just not truly putting yourself out there to grow. So I think that feeling is important on all the different levels that you're saying. So,
yeah. So Simon, as you were growing, and we'll get to the actually founding in Flawless Homes in a second, but I know you did a lot of mixed use buildings. Like we just talked about that. Can you just touch base a little bit on the nuances there? Right, a little different to underwrite. A lot of our listeners probably have a 3-unit, 6-unit, et cetera. A lot of people probably haven't dealt with the commercial space. So can you talk a little about like some of the nuances of those mixed use buildings?
Yeah. So in many ways, they're tough. Let me start with why they're tough. For one, the CMBS or the commercial mortgage-backed securities rates are higher on mixed-use properties, right? So essentially, your interest rates are higher, and that's if you can find someone that's going to fund it. So, if you're getting a traditional 4-unit building, right? Let's say you're a first-time investor and you want to buy something and you have an FHA card because you've never bought something before. I always say go try to get a 4-unit building because that you're going to use your FHA card. By card, I mean it's a first-time home buyer. If you get an FHA loan, you can get into a 4-unit building pretty easily. So there's a lot of liquidity because there's a lot of loans available for 1 to 4 units. Once you get into commercial, including mixed use, that becomes a lot more scarce. And then so you could possibly get an SBA if you occupy the property, but that has its own underwriting guidelines. And then local banks, if you have a good banking relationship, which if you're a new investor, you probably don't. But local banks and credit unions may underwrite those deals, but then again, they don't want to deal with a lot of Class C 1, 2, 3, 4-unit mixed-use properties either. So they're looking for larger Class A and Class B properties too. So it's kind of hard to underwrite. So the rates are higher, but the cash flow is good. And the cash flow is good because there's less liquidity for those, because the rates are higher. So typically what you'll see is you can get a 4-unit plus 1 commercial unit or a mixed use for less than a typical 4-unit building that's all multifam. And the reason is because of, the reasons I just described. And so you can make more money with the 4+1, the mixed use, versus the 4-unit, and it's cheaper to buy. So as long as you can get into them and get the right financing, I think they're a steal. And essentially, in these times where it's really hard to buy real estate at a good deal because everything's priced really high as far as what it used to be about a year and a half ago, it's these can work out really well.
Yep. How did you go down that path? Right, like you just buy one and say, "Oh man, this is working." Right, like it's kind of a weird niche. We haven't had anyone talk about mixed use that much. Like, how did you go down that path? Did you seek it, or just kind of one falls in your lap and you go, "Wow"?
So I think I was just looking at properties. I mean, so I'm a deal junkie. Whatever I'm doing, I'm a deal junkie. If I'm buying, a TV, if I'm buying a property, I'm a mod. I'm an admin on a website called Lease Hacker. For like the past 6 years, and that's like finding deals for cars. So whatever I'm doing, I'm literally a deal junkie. So I think it was like during my time when I was looking at buildings, and I was like, man, I can't find any multifamily buildings that meet the parameters that I need, for for purchase and for ARV. And I'm like, the only ones that are working are the multifam. And so that was part of it. There's also a lot of tax benefits for having multifam. If you're looking at it as a commercial, on the commercial side, it's about 2.5 times more expensive for straight commercial, tax wise versus multifam. So, and then the reason is because the county the assessor looks at multifam properties differently than straight commercial buildings. So there's a lot of good benefits to having mixed use property.
Got it. Good stuff there. All right. So you become the founder and CEO of Flawless Homes. Talk about that 6-year journey. You say, okay, we're doing it. We're going to keep crushing it here. We're going to open a brokerage. For someone who hasn't heard of Flawless Homes before, give us just a little bit of that history. And then what are you guys about? Like, how are you different than some of the other players in the game?
Yeah. As far as brokerage go, we're a boutique brokerage. We're not, we're under a dozen people as far as the brokerage side. And I focus on commercial, the other guys do residential, and and we also have people in property management, but it's essentially a great parallel to our business, as far as like the redevelopment, development, and adding to our portfolio. So it made sense for us. We got really, like I said before, we got really good at it. So it made sense to put it out there for everyone else to kind of use those services too. Awesome.
All right. So now, I know the reason Renova made the intro is you are, you're teaching classes like at Chicago Title about blockchain and real estate and the disruption there. So want to dive in, but before we get into any of the nuts and bolts, investors like myself know nothing about blockchain. Why should we care, right? Like, why should I even care about what's going on with blockchain and what it's potentially doing in the industry? Like, just for someone who's completely naive, like, let's start there, and then we can go into kind of like one-on-one discussions and take it from there.
So if you're thinking why blockchain matters now, is this the same reason why internet mattered back in 1990? So in hindsight, hindsight is 2020, but if you're looking back, you're going to think, well, maybe I would have done things differently if I knew now what I knew then about the internet. And I think blockchain is very similar. It builds essentially on the internet. You need the internet. You need electricity essentially to make blockchain work. So it's a digital thing completely. Everything that's moving forward, a lot of things that are moving forward are being built on it.
So, okay, so makes sense. But as an investor, what is this disruption? Like, is someone who's totally unaware, how is it changing how I go out and buy a 12 unit?
Um, that's a good question. So, how would it change what you do in your real estate investing portfolio? For the most part, Class C, Class B, even Class A, most of it is not going to change because people still need a place to live. They need a place to sleep. And that goes especially for residential or resi. If you're looking at industrial, our behaviors change, and so that will change. If you're looking at commercial, again, our behaviors change, and that will change. But if you're looking at for regular residential real estate, I think that the biggest changes that blockchain technology is going to bring in is essentially tokenization, or the way that capital is raised. Digital securities are handled as far as those properties. But I know that we want to talk about this later, but how will real estate change in the future? The physical real estate for Class C and smaller buildings, it's not going to change much. And it's funny because I was watching, I don't know if you guys ever seen this, or read the books or played the game even. There's a show called Expanse on Amazon, right? And so it's about how in a couple hundred years, humanity's in the future. And one of the scenes showed Earth, and there's still Class C buildings. The only difference that we could tell in the show is that they just had solar panels on top. So it's really not going to change that much for smaller buildings and smaller portfolios. But I think for tokenization, that'll change as far as larger capital movements and buildings, portfolios, funds, REITs, things like that.
How does that change on the brokerage side? Like, what will that do to the brokerage world when it comes to these changes?
So that's a good question. Obviously, things are making the world smaller, right? So usually you'd have the broker find properties for clients. They go out there, they show it to them. Now things are changing where clients are sending Zillow links to their broker and saying, hey, I want to see this. I want to see this. So that's changed, right? But there's one thing that technology will not take away. Technology will streamline things, but it will not take away expertise. And so no matter what you have, you still need expertise to get through and be on the top of your game. And you want to hire someone, as far as a broker, that has expertise in that field. Otherwise, you could see 10 different houses online and the algorithm could put a price on what they're worth. But really, you want someone that's an expert in that field, in that arena, to tell you this is better and that's why. And I think that the same thing even goes for blockchain. We talk a lot about now the metaverse, because that's digital land, right? That's digital vehicles, NFTs. You still need someone to say that has expertise in that arena that will say this is better than this and this is why. So I think that in brokerage, expertise is really going to differentiate, the legacy brokers to the new age brokers.
I think for the sake of the listeners, or for maybe me even, kind of walk through, like, if I'm an investor and I'm looking to buy an investment property, what does 20 years from now look like in this kind of blockchain world?
Oh, it's just like the Jetsons, right?
Yeah. Right. Like, what do you see? I mean, there's some crystal ball here, but like, where do you see this going? Like, from just kind of walk us through what you could see something looking like.
On face value, I don't think you're going to see much of a difference, even in 20 years. I think most of it comes in the back end. Essentially, blockchain, for it to really work and be successful, it needs to be on the back end, and it needs to be seamless. And we can talk about what blockchain is, because I think a lot of people may not know what it is. But on the back end, it just needs to be seamless. The same way you log onto your Wi-Fi and you get on the internet, you don't really know how it works. You don't know how you're getting on. You don't know what's going on and what they're doing on the back end, but you know it works. and and you know your apps are connected to it, and you know you can get to the website that you need to. So I think it's the same kind of vision. How does it change real estate? I think that on the title side, you know, there could be some things on there that could, you know, for security. I think for identity, blockchain is going to be used. I think for digital securities or ownership, tokenization, it's going to be used. But again, it's most likely going to be in the back end. You know, new companies are going to sprout up. A lot of them are working on these items for people to use them. But it's all going to be on the back end. I mean, as a buyer, I don't think people are really going to know that they're even using blockchain technology, and that's how it should be.
Yep. You mentioned tokenization a few times. So we had Neil Bawa on episode 110 who touched on the subject, but can you give us just the high level definition? What is tokenization? What is either the advantage or disruption that it's going to bring to the marketplace once it becomes more mainstream?
Okay, so I think before we talk about tokenization, let's just talk about really quick what blockchain is.
Yes, please do take that step back. Sorry, we should have done that earlier. Go for it.
So blockchain essentially is an immutable ledger that people can change, you know, once it's been written. So think of it like a really super secure Excel spreadsheet that never lies, and it can't be edited to give false information, right? And to kind of put it into perspective, let's say, let's say Mark, me, you, and Tom are in a group text message, right? So if me, you, and Mark are in a group text message, and I send you a message, so it goes on all three of our devices. We all see the timestamp, and we know what I said and to who, and you know what the information was in that message. Now, if I didn't like what I said and I delete it, if you go back between the group text message, Mark and Tom, you guys are still going to see that message, and you're going to see when I sent it, the time, and in the order that it was sent. So in the same way, that's the analogy essentially of blockchain technology or DLT. No matter what you do, it's still on there. It's still on chain, and so it's an immutable ledger essentially that gets verified by multiple entities or users or nodes or miners or minters, you know, depending on the type of chain, and it can't be modified. Otherwise, it messes up the whole chain.
Okay, so now let's jump into tokenization then, right? So that's the background of blockchain with the advantages that it brings to the table. What is tokenization?
So tokenization is essentially taking one asset and splitting it up into tokens or digital shares. So essentially, they're just shares of a single asset. Now, that asset can be a portfolio, it can be a house, it can be a building, it can be a piece of artwork, it can be your t-shirt, right? So tokenization essentially is digital shares on that ledger system that's on blockchain. And it can be split up, you know, however the ecosystem wants to get it split up. And so what are the benefits of that? Well, if you guys remember, anybody here invested in CME or using the Robinhood app when that thing was, or AMC, I'm sorry, when that thing was happening? Do you guys remember a few months ago?
I'm not good at this, but was the Robinhood thing? That's when
the GameStop,
it was all being shorted, and they just said, screw it, we're cutting it off. Like
Yeah. So okay. The reason they gave, and this is like, layman's terms, but the reason they gave to cut it off is because they couldn't get the funds because of settlement times, right? So when you sell your shares for a certain stock, it takes 2 business days essentially to settle up. Well, with blockchain technology or DLT, depending on the chain you use, you could settle up in a matter of seconds or minutes. So you wouldn't need that T2 or that 2-day 2 business day time frame to settle those funds, it's all automated and it's on the ledger, it's on the blockchain. And so you can imagine cutting out all those issues and never having to worry about settlement times or getting, your trading cut off or whatnot. So I think that literally every single stock is going to be tokenized eventually. It's going to be on some kind of ledger system eventually.
So does that make it more easier for someone who's, blue collar Joe who doesn't have a ton in savings, to make it more affordable, make it more easier for someone to get in the game? Like, what does this do just overall to the public and how people invest?
I think it really breaks down the middleman. And so, so a lot of times, especially like in the past in private REITs, you would have illiquidity because, you come in and you're like, oh, well, I want to invest into a REIT or into this kind of private fund, and everything is done manually. Whereas, and they charge you a big fee for that. Whereas if you have these digital, securities that are easily set up, easily transferred, easily monitored, and it's all literally on the chain, it's transparent. I think you can use those systems to enable liquidity. I don't think it's an automatic, liquidity thing, but it does enable that if you have the right marketplace and the right ecosystem around it.
Why is, and this is a question that can help me understand it a little more, I imagine any of our listeners, like, why the word tokenization? Why tokens? Why not just shares or stocks? Or why, how is it different, or why is it different? Is it regulation? Just what's the difference and why?
A lot of it is to do with marketing. So formerly, when I was at Building Block REIT, we were working on what to call this thing, right? The token part. And we were thinking, okay, well, what is it? If it's a security, which a lot of these are, they need to be designated as a security. So I like to call those items digital securities to make it easy. They can also be called tokens, but then it can get confused because some tokens are utility tokens, and then some are designated as securities by the SEC and the laws of the United States. So we got to be really careful about what we call what. But a lot of it is I think a lot of it is just an evolution. It's marketing. So don't get too hung up on the name, but essentially they are digital shares, digital securities if they are a security, tokens if they are a token, or utility tokens. So Mark, did I answer that part, or you want to dive a little bit deeper in that?
I think it makes sense.
Yeah,
I just wanted to get that clarification because I think if I have it, I think anyone else might have it.
So
for sure.
Just going back high level for a second, does this make a real estate transaction more efficient? Right, like, because you mentioned like title, even things like pulling water. So it's like there's so many inefficiencies to get to the closing line, and we've all been there, right? And you're just like,
yeah,
damn, this is ridiculous. Like, what are some of those inefficiencies that just get nixed by this?
So eventually it's going to help. Eventually, and by eventually, I mean probably 20 years. You're going to see a lot of counties moving over to recording on blockchain. I know the guys at the Cook County Recorder's Office were recording, mirroring title recordings on Ethereum blockchain. So they were experimenting with that. I think eventually it will help a lot between private companies like title companies and between different counties. It's gonna change, but at the same time, a lot of it's not, right? So maybe half the counties in the United States still don't digitally record, and so
is that true? That's crazy.
It's a big amount, yeah, and so when you think about that, and there's a lot to it, right? Every government is different. They have to vote things in. There's county officials and bureaucracies and things like that. So for everyone to catch up on the public side and the private side, I think it's going to take a long time. But I think in 20 years, you're going to start seeing a lot of closings move faster and happen a lot easier. You're going to see a lot of settlements as far as digital securities happen a lot faster because of that too.
Got it. So what else as an investor should I be, you've answered this earlier, but as an investor, what else should I be looking out for, right? How does this potentially disrupt what I've built over the last, 5, 10, 15 years? Is there anything where it's like, oh man, like what used to work in the year 2015, the year 2020 won't work in the future because of this disruption?
That will really depend on what asset class you're looking at, what vertical you're looking at, right? So if you're looking at commercial retail, I think that will continue to change because now you have Web 3.0, right, where you can go on the metaverse, buy a Lamborghini, and with your avatar, and then that Lamborghini will get delivered to your house at the same time that you have a digital Lamborghini in the metaverse. So is that going to change the guy that has a 4-unit, 12-unit, 20-unit? Probably not. But will that change commercial retail? Will that change industrial and supply chain? Yeah, I think that's all going to get changed and disrupted. But as far as brick and mortar, single family, multifamily, up to certain sizes, I don't think they're going to have a big change over the next 100 years. Apart from their taxes are probably going to be 10 times what they are now.
Metaverse. What is, you got to break down metaverse for me, or is that, what's that synonym for?
Metaverse, think of it like World of Warcraft, right? But there's different styles of that, but essentially it's just a digital verse. It's kind of, it's actually what Facebook is working. They're one of the ones that are working on it. So Facebook changed their whole name to Meta. And that's essentially their take on the metaverse. In some ways it's amazing, but in some ways it's sad too, right? Because you're going to see a lot of people using social interactions physically less, and then having more digital interactions. So in some ways it's good, but in some ways it's bad.
Got it. Man, Mark, lot to digest.
Yes, I think I'm still gonna have to listen to this one again and go Google a couple more words that I didn't ask about. So I gotta.
So let me blow your mind a little bit, guys. There's land in the metaverse, sandbox, network, Decentraland. These are all metaverses. Meta from Facebook is metaverse. There's yachts being sold in, I think there was a listing for like 50 Ethereum, which is like $200,000 for a digital yacht. There's a lot of brands opening headquarters in the metaverse: Adidas, Nike, banks, things like that are opening up branches and securing their land, their digital land in the metaverse. So I think, is that going to change? Again, is that going to change your rents? Is that going to change, the guy buying a 4-unit, 6-unit, 12-unit? Probably not. But is that going to change? If you walk into those buildings and you walk into those apartments, you might start seeing people on 3D, glasses or on the computers a lot more. That's the change.
Yeah, we're gonna have to go back to. We're gonna need to wind this down. Simon, is there, before we wrap here, anything else you want to bring up that we haven't covered? Any other major points that our listeners should know about?
So as far as like traditional real estate goes, there's a whole lot of things going on in the market right now. Be super diligent, take your risks, but take educated risks that you can handle. As far as blockchain, crypto, metaverse goes, dive in, learn about it, right? Go buy some Ethereum, go buy some Bitcoin, transfer it, save your private keys and don't show them to someone else. So there's there's a lot to learn in different aspects of this, but yeah, I mean, just have fun with it, and it's a rabbit hole. There's a lot to learn, but there's a lot of good information out there. So
Awesome. Good stuff. Mark, we got some learning to do.
Yeah, no, for sure. We're gonna have to have you back on to break this all down again. Listen, I just chatted to Tom in the comments that it take me an hour to break some of this down, so I'm going to probably come back with some questions that we'll post in the notes, in the show notes. So
perfect.
All right. So here's the questions we ask all of our guests, and we will 6 of them, and we'll fire them off. So in the space that you're in here in Chicago real estate, what is your competitive advantage? How do you think you've been able to do this and get where you're at today?
So I think a lot of it is size. So I can make decisions quickly. We're privately held, so we can move fast. And we look at the market a little bit differently than everybody else.
Simon, what's one piece of advice you would tell someone that is yet to buy their first property here in Chicago?
Look at all of Cook County and the surroundings.
Gotcha. All right. What do you do for fun that has nothing to do with technology, man?
Man. So that question, since I had a family, is like getting smaller and smaller. And then since COVID, I can't travel. So again, smaller and smaller. So what do I do for fun? I mean, I play video games when I can. I'm a deal junkie. I try to help thousands of people online get, good deals on cars and things like that through that website. I used to like to travel, but can't really do that much anymore. So yeah, I mean, I play Dungeons and Dragons.
There you go.
There you go.
Awesome. What is a good book, podcast, or self-development activity that you would recommend to our listeners?
I would say a role-playing game. Get into like something like Dungeons and Dragons with your family and your friends. Doesn't have to be that game, but some kind of cool tabletop role-playing game, and you'll see that you can learn a lot, and you build a good imagination with that.
Awesome. Besides yourself, name one person in your local network you'd highly recommend to other Chicago real estate investors.
I think Renova Financial actually does a great job. They're a great lender that understand the city. I'm working with them. I've been working with them for years in multiple states, but they understand the city. So I think, check out Renova Financial. They're a good market leader as far as lending goes.
Yep. Yeah, Mark and I both use them, show sponsor. So we give you the thumbs up there. So, all right, Simon, thank you so much. You provide a ton of value to our listeners. How can they learn more about you? Is there any way they can provide value to you?
I'm back on LinkedIn. I took the Q4 2021 off of LinkedIn, but I'm back on LinkedIn. So connect with me on LinkedIn. You can send me a message. Let me know that you found me on the podcast, and I'd be happy to connect with you. I try to give out a lot of good information on there as far as real estate goes, blockchain goes, and how they intersect.
All right. Now, Mark, after all that, this should be a little easier. I think you can get this one. No pressure. And Simon, we'll give you a chance at it too. So our Chicago question here. So I'm going to give you 4 L tracks, and you're going to tell me which one of these does not travel around the elevated loop in the loop. Is it the brown line, the blue line, the green line, or the orange line?
Orange line.
Simon, you want to take a shot?
I'm not good with the CTA questions, man. I mean, I've only taken the yellow line because my office is out in Skokie. So I take the yellow line.
That's a little guy.
It's the little guy. It's like 2 stops. And then I hop on from there on the red line or the blue line. So, I'm not a good CTA guy. So I'm going to pass.
All right.
But okay, wait, give me the options one more time. I'll take a guess.
Brown, blue, green, or orange? Which one does not travel around the elevated loop in the loop?
Brown.
You guys are both wrong. It's the blue line. The blue line goes underneath. It doesn't go on the elevated.
Oh man. Okay.
It goes down by a daily center there. It goes under.
Yeah. She knew
It
that.
does go in the loop though. That would have kind of tricked me a little. The elevated part. That's what they're talking about.
So that was the trick part of the question there, the elevated part. So orange goes too though?
According to Wikipedia, I'm not an Orange Line guy unless I'm going to Midway. It's got to because you can get it at Clark and Lake, I think, and take it to Midway.
I think you can. All right. Yeah. Okay.
Last time I was in the blue line, I thought that thing was going to fall off.
Yeah, I think as un-Chicagoan as it sounds, I think the blue line's the only one I've ever even been on. Coming.
What?
Yeah, I don't think I've ever been on anything. I think the only thing I've ever done is you park at Rosemont, take the blue line.
You guys are crazy.
Addison and take the bus over to Wrigley. Like that's the most I've ever done.
I think my 5-year-old's been on 3 of those 4 that I just mentioned. So
well, you live in this. So all right, awesome. Well, Simon, thank you for coming on here. Tom, thank you as always. Listeners, please check out. We updated even more this year so far. The real estate meetup groups. A lot of them are meeting virtual right now. So even if you are a listener and you're not local to Chicago, but want to learn more about Chicago or network more Chicago, check out our list on our website at straightupchicagoinvestor.com. Simon, thank you again. Tom, thank you. Everyone, we'll see you next week.
Thanks all.
Thanks, Mark. Thanks, Tom.